some very significant volatility, Gurmeet, in the stock market. And, if you were to look at 1 week or 10 days or 1 month or 2 months or even a 3-month kind of a period, you would feel extremely scared to be in the market in equity. But the minute you expand that horizon, things start looking differently. So how important, according to you, is time period when you consider investing in equity? Many people tend to invest in it, and then the minute there's a fall, they want to withdraw. I mean, we've seen, I'm sure you also have got multiple calls from people that should I withdraw right now?
Yes.
But when, we keep saying 3 to 5 years, but what is the right time period in equity?
Yeah.
And again, is it about I've invested and I should just forget about it? Or is it about, constantly reviewing it? If so, in what duration should one look at that? So time period and its importance, if you could tell us.
I think the minimum time period has to be 5 years and plus. I think the more the better. Equity returns are non-linear, and you can have extended periods of 2 or 3 years of flat to no returns. The long-term capital gain was introduced on 1st February 2018 in the budget, and index levels were 34,000. We are practically at the same level 2 years from now. So, but what we have seen is that whenever you have had 2-3 periods of subpar returns, it's usually followed up by a decent performance in the following 1 or 2 years, and that's how that 10-11% gets sustained over a 5-6 year period. Short-term volatility, I think this is where the good investors will get differentiated from average investors. The volatility is integral. This is time actually to, if you have liquidity, you should sprinkle your dry powder over a period of time, because there's no point calling the bottom. Even if you see 2,000 points lower tomorrow, the courage to deploy cash. So we say courage, cash, and conviction. All three rarely come, at one go. So it's good to be disciplined, good to do it gradually and let the event play out. Never try, to catch a falling knife. Let the event get settled, and you continue with your disciplined allocation. And in case there is no liquidity, just continue with your SIPs. What is going to happen in next 3 or 4 weeks is not important. How the market would be 3, 4 years, 5 years from now, that is more important. And that is why, I think financial planners have a very important role to play in this phase. I think hand holding is important, and this is where the behavioral finance takes over, the pure fundamentals of finance.
It's more of fear in the short term, but try and not let that cloud your long-term goal, which is what equity is meant for and not for the short term.
And be objective with the client. Demonstrate, how in past these events have played out, and show how what happens when you sit through a correction. There is enough data point to look back, and every 2-3 years there is a 20% kind of a drawdown. There's nothing so this is a little different though, because here
it's been too sharp and sudden.
The ferocity of the fall, Vivek, I think is what is unnerving clients. Also, I think we should remember the base was 40,000. So when we say 1,000 points, 2,000 points, it's better to speak in percentages than. So I think what is spooking the clients is the ferocity and the intraday volatility, and that again comes from the fact that when you have panic, the fluctuation happens on very little volumes. Right. So that's where asset allocation comes in. You have the bond market, which has done. So if you see last 1 year return, the bond markets and gold have done well, and these are the times where you rebalance the asset allocation a little bit. If you were at 50% equity and equity has taken a 10-15% knock, this is the time to actually rebalance it, and that's why asset allocation is
bring it back to 50%.
Bring it back, just see what you can do. Can you do it? Obviously you have to keep tax in mind, the exit loads in mind, and if you have fresh powder to put to work, it's even better. But do rebalance in times like this. So I would not say just sit through it and don't do anything. Just try and see if there's some bit of rebalancing you can do. Again, when the events, don't try and right now do it at too high a fluctuation. Once it plays out, that's the time to actually have a relook.